Wow, that was a rough January for the stock market. Stay tuned to this video market update to find out how we did in January and if there are any indications on how we might do in the next few months to come. So we've just wrapped up January, where we saw some of the biggest declines in the market since the pandemic started in March of 2020. In January, the Dow Jones was down a little bit more than 3%. The S&P 500 was down a little more than 5%, and the tech-heavy NASDAQ was down almost 9%. For the S&P and for the NASDAQ, those were the worst months since March of 2020, which was when we started a global pandemic. In fact, January was the worst single month for the S&P 500 since January of 2009. So the question is, now that we know where we've been, the question is, where are we going, and are there any indications that might tell us? So one technical gauge that we can use, that many analysts will use, is something called the VIX, the VIX, which is a volatility index, also known as the fear index. It essentially tracks investor sentiment, and it is used by technical traders to determine potential future moves of the market. So it works like this. When the market is doing really well, investor sentiment is high, right? There's a lot of good feeling about the market, and so the VIX will go down. When the market's performing poorly and there's a lot of nervousness and fear, the VIX will go up. Well, in late January, the VIX was up for 7 straight days, which is not good. But one glimmer of hope is on the 8th day it dropped, which signaled to traders that maybe the volatility and the fear had subsided. In fact, in 2 decades, the VIX has not risen more than 9 days in a row. And of those times that it had, the previous month, the month after, there was positive performance. Another indicator is that the put and the call ratio, which is another way to determine how much fear is in the market, that seemed to peak in October. What that means, and you can see right here in this little chart, is that of the 13 out of 16 times that the VIX had peaked, and many think that it peaked in October, 13 of the 16 times that it has peaked, the next month, which would be February in our case, the market performed positive. So does that mean that because a few technical gauges have said we had a bad month, which means we should be having a good month? Does that mean we're poised to have a good month? Well, there's still a lot of global conflict. There's still the worry of inflation. There's still the concern about interest rates, which have subsided a little, and that was part of why we had the big January sell-off, was fear of interest rates. So there's always going to be concerns, there's always going to be issues, but a lot of the issues we have been issues we've been dealing with for months now. So just a couple of technical gauges to look at that say maybe the worst is over, and maybe there's some optimism as volatility may smooth out in the next few months. So that's this week's video market update. If you have any questions on that, let me know. If you find value in this video, go ahead and give us a quick like. And if you haven't subscribed, why not? Then you can be notified of other videos we may have coming in the next few weeks. So any questions on that, let me know. If not, I hope you make it a great week.